Isaiah chapter 40, verse 31. But they who wait for the Lord shall renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever.
Good morning. Good morning, good morning, good morning. All right.
Psalm chapter
Oh, whoops. Sorry about that. So yeah, Tony, how was your week? Definitely let me know in the chat how your guys' week has been. What's a positive thing that came about? What's a negative thing? Or, just how was your experience last week? Definitely let me know throughout the call. Tony, do you have any questions before we get started? Specifically? Appreciate you always hopping on. Yeah, we got a lot to discuss today, as always. Oh, amazing. Amazing. Tony said life-changing. Amazing. So yeah, let's let me actually, only problem I was waiting. Yeah, you got to remember, us not waiting, right, or having an inability to wait for the setup that we're looking for is very much like us trying to cross the street and we get impatient, so we just run out into the middle of traffic. So it's the same exact risk. You know what I mean? Same mindset, same issue, right? The lack of patience, being in a rush to get somewhere. It can end in you getting ran over by a car. Okay, and in the market, it could end in you making mistakes that might spiral you out to blow an account and all that other craziness, right? Tony says, learning with me, how to have a high win rate. Beautiful. Yeah, exactly. No signals, and it's all done by yourself. I'd be telling people, all you got to do is pay attention, show up, be ready to learn, sincerely try to do this on your own. And I'm literally pointing to things that you can easily classify as signals, but that's not my goal, as always. My goal is to get you guys to know how to do it on your own. All right, so that being said, back doing futures and Forex again. Okay. Yeah, you can fluctuate between the different asset classes, but again, you want to make sure you solidify one mainly, so you're not too spread all over the place. Did a personal challenge, $10 to 89, made a small withdrawal. Oh, nice. Nice. I'm assuming that's in Forex? Or maybe the CFDs. CFDs are something you could be messing with. But yeah, so to get started, as always, right, so we're going to go over the news, higher time frame analysis, Power 3 from the monthly, weekly, daily to get a game plan as far as, what could potentially take place. Then we got risk related to CPI, right, the CPI protocol that I'm going to go over today. Liquidity, right, we're going to reinforce liquidity concepts based on liquidity mapping and market maker buy and sell models, see if there's anything that we can observe in that regard, and then we'll see what else I want to add. But in a nutshell, that's pretty much the whole process we look at. I'm not sure if I mentioned risk on, risk off, but that's pretty much just overall analysis for every different asset. I think I'm going to look at commodities today too. I've been glancing at them, but today we're going to look at gold and oil and see what we can gather from that information, okay? So yeah, with that being said, as always, let's begin. So we start at the interest rate markets, okay? Most of you guys that have spent time with me know. And of course the T-bonds or T-notes, they directly correlate or influence, I should say, what the indices and foreign currencies are willing to do, and the yields, right? The 30-year, 10-year, 5-year yield market generally influences what the DXY is going to do. So with that being the case, that is why we start here first, in order to move on to the other things, so we can have a good piece of background information. And once we get that done and we get into the DXY and the other assets that we potentially utilize for engagement, we have a good backstory as far as what should be trusted, what's more likely than others, and yeah. So yeah, with that being said, looking at the bonds, if we go to the monthly chart, actually let's go to the quarterly real quick. Okay, minimize. So yeah, looking at the bond market, we're in consolidation. The 30-year is definitely moving pretty quickly. To the downside, it seems more interested in the other two. There's not really any SMT that I can observe, at least from this time frame. So yeah, that's something supporting what's happening here, right? There's not really an SMT at the lows, I don't think. Let me double check. So I guess there was, but it doesn't seem that they are holding up. Notice how this one made a lower low than this low, but the other two, well, the Dow, or not the Dow, the 5-year, is making a higher low, right? And you could see the difference, right? This one too actually failed the left equal lows. So that's why these have had a larger retracement. They've been less interested in trying to go higher, or go lower, I mean, the 10-year and 5-year, compared to the 30-year. So the S&T is influential in that regard. But overall, we're still going to the downside. Nothing has changed. So it's still not supporting the run higher. There's still a cracking correlation, which there has been for the whole entire year, pretty much. Hasn't really been in sync for the most part since the start of the year with the currencies and the indices. So, with that being said, right, we're looking at price in the bonds, and the quarterly chart is showing that we've started being bearish. All right, if we move to the monthly chart, we could start mapping out some things. So the first thing you do when you're on these higher time frames, you want to think about this real quick. Let me pull it up. Okay, I have this for the free community as well. But of course, being part of the private group, it's very beneficial because you got constant updates, and you can always hop on Zoom with me and whatnot, and we go live every single day. But nonetheless, hopefully this is still helpful. I know this has been very helpful to some of you guys, like Tony, for example, and pretty much all my private group has gotten beneficial information from this in terms of price navigation and clarity. So for you guys that are in the free community, the free part of the family, again, I hope you guys take this stuff to heart. Do not discount things that are given to you for free, because most of the time free stuff is discounted and they don't use it, even if they see other people's having success with it. Just same with ICT's concepts or his videos, because he's now got everything out there, or most of it at least. But yeah, most people discount it, and it's to their own peril. So looking at the higher time frame, okay, like I said, we got to observe our higher time frame references, okay, and then of course lower time frame comes later. But the higher time frame references has to do with the 20, 40, 60-day look back, cast forward idea, which I'll let you guys go ahead and go do that. Just draw a line from June, the start of June, go 20, 40, 60 ahead and 20, 40, 60 behind. And let's actually do that real quick and see if there's any of the low here or the low here that are beneficial to observe. Take this, put it at June. And we get data range tool. Let me actually switch to a weekly. Actually go to the daily chart, see if I can get a more precise. Yep, 20, 40, 60. Okay. So if we cast backwards, there's not really any liquidity that perfectly aligns with this. We do have this low, so if it's going to go lower, that's my objective anyway. And then of course, if we go up in time frames, we can also see that there's this one down here too. We do have this monthly fair value gap. Or the monthly chart. Oh, wait a minute. What is that? Monthly fair. Oh, that's above. Okay. And then this is the quarterly fair value gap midpoint, or the quarterly wick midpoint. I don't know why the hell I had it marked like that. So that is the wick midpoint from the quarter. So, and if you break that down, obviously, into quadrants, you get a feel for the different quadrant levels inside that wick. And that's how we utilize the wicks. And if price is pushing into it, they become targets. Like if you don't have any logical target to look at, you can just simply use the wicks. Same with this one too, right? But more so this one. And if we go ahead and break this down into quadrants, right, we got 108.25. 108.25 there. We got the quarterly wick midpoint, which you could see that this beautifully tapped into, just further amplifying the reason why this is so important. We do have this wick here. We have this order block, so that's basically held. We've been talking about that for weeks at this point. And prices, it's not showing interest to want to go higher yet. So we're just going to continue trusting downside, especially since the higher time frame structure looks like that's the case. Okay, so we got that. So if we move up, I can say that if we break below this order block here, it's going to probably act as another order block. You could simply use the wick here and then just further confirm and trust the fact that it's going to keep dropping. Again, this is a quarterly time frame, so each quarter is each three candles is 3 months, so it takes a while. So it's not a be-all end-all. It's not something that you'll use right away, but it's good to use these extreme time frames on the higher time frame to really solidify your ability to hold on to a narrative. Because bias changes on a day-to-day. Sometimes the bias in a downtrend is bullish because it's retracing to a premium array or a higher of some kind. And then, of course, it'll continue. As long as 3 PD arrays don't get violated, we should be good to continue dropping in this case. Especially if you use that tactic on the higher time frame. Lower time frame, you can do it while you're managing a trade, as long as you're framed from a higher time frame PD array or a higher time frame setup. It could be very reliable to use the 3 PDA validation principle when you're managing a trade. I showcase that on Tuesdays here, but I showcase it every single day pretty much with my live group. So again, if there's ever any interest in your mind to get more help, be on live, more with me because maybe you like the way I teach or, whatever the case may be. Again, that's always available, at least until, at this moment, until the end of July. That option will be available, and then we open back up in November, because then I'm going to use the rest of the year up until November to really pour into solely my private group. I'll be on YouTube still, but my private group's about to get a whole lot of attention. So yeah, it's just a reminder that that's available to you. But again, looking at price, the first thing we do, right? Let's start on the monthly chart here. Keeping in mind our liquidity mapping principles. Okay, we have previous days highs and lows, weeks highs and lows, months highs and lows. So when you go to, say, the monthly chart, your first objective to keep in mind has to do with the previous month's high and low, because the next candle that prints is going to open up inside the previous, or in this case, the current month's candle. We opened up inside the previous candle for the current month, and then look at what it's been doing. It literally peaked above previous week's or previous month's high, used it as opposing liquidity, and then declined. We have an inversion fair value gap in here, which we'll highlight in a minute. But again, the first thing you look at on every single asset when you look at a specific time frame is going to be the previous high and low based on that time frame, because the current candle is going to most likely, pretty much all the time, has to open up pretty much inside the previous candle, whether you're on the 1 minute, the monthly, weekly, daily, yearly, it doesn't matter. It's still going to open up inside that previous candle. So as a result of that, your previous, or your liquidity that's most near term that you want to pay attention to is always the previous candle's high and low. Okay, especially on the higher time frames. It's a little more nuanced on the lower time frames, but even there, the principle applies. So again, it's part of liquidity mapping. Get you comfortable with identifying liquidity that's important, and so again, looking at things from this current perspective here, we take some of this stuff off, or turn some of this stuff on. Remove the wick here. We'll kind of remove some stuff. Okay, so we got that. We have this previous monthly fair value gap, right? You could see it. And prices pretty much used that range. And if we get a breakdown of the quadrants, you could see we used the middle portion of that fair value gap very effectively, and prices went down as it took out the previous month's high, which is a setup liquidity, at least for now, for this movement lower in the current month, right? So yeah, that is important. So I hope that makes sense, right? Very easy way to get yourself calibrated liquidity-wise. And again, this process I do every single week is called liquidity mapping. It's one of the most simple things you can do, but it's also one of the most powerful when it comes to navigation, being able to understand what's important right now and what could potentially be reached into without thinking too much, or having too many moving parts. Okay, and then I have this. It's a weekly bearish order block. I think it's 2 week. Yeah, 2 week bearish order block. So we'll keep that mapped out. So not only do you got to look for the high and lows based on the relative time frame you're looking at, once you figure that out, right, and now you're going to move, to look for other things, you then want to look for PD arrays that are in close proximity. Okay, so if we start here, PD arrays can be order blocks for value gaps, the wick quadrants, previous highs and lows, any patterns that you look into, like breakers and whatnot. All that stuff is going to be relevant after you pick the highs and lows that you're going to observe and utilize as a structural framework to map liquidity. So, and then you also want to consider, right, how is the liquidity mapping idea in terms of the liquidity, like highs and certain highs and lows, how does that fit inside of your analysis of the other PD arrays that are in close proximity, right? Maybe this monthly high was also nested with a fair value gap, like you see here. Or maybe it's a bearish order block, right? That could help support the idea of us setting up a certain liquidity pool to then be used as liquidity to then target the other opposing side. Okay, so that's a way you got to think about things as well. But again, highs and lows, right? So we got the monthly highs and lows because we're on the monthly chart. And then we got to look at the PD arrays that are in close proximity. Fair value gap. These up candles, if we go to the 2 month, it's an order block. You can see that. Okay. These are big time frames. So again, it's not something that's going to change tomorrow. But there's freedom in that because it makes it so you're not going to flip-flop. If the lower time frame rallies, you're not going to think that we're overwhelmingly bullish just because we see a rally. You know that we're rooted on this monthly chart going lower, at least for now. So much so that you're going to hold on to it until 3 PD arrays get violated on the monthly chart. That changes the narrative on the monthly chart. Same as the case on the weekly and daily chart, right? For the relative time frames, the liquidity mapping you use could be a little different, but you transpose them across the board, right? So you start getting a really clear picture as far as what is actually going on. So then you can, again, trust your setups for weeks. I've called bias and narrative for now almost 7 straight months. Every single week, we've gotten the draw and liquidity correct. We've gotten the navigation correct live in front of people. So again, what I'm saying has now evidence from not only myself, but others as well, other elite ICT traders that you see on YouTube. They're using these principles. They may not talk about it as much as I do because they don't want to give it all away, but it is what it is. I'm trying to help people, and there's still learning that goes behind that, and it's still, some people are still confused. They just need the extra help. So again, I have a private group for that, but hopefully what I've been doing has been showing you the importance of this. I know Tony and a couple others have been doing very well with the YouTube content and these live calls, as well as the trading calls that I do once a week. So So hopefully all this stuff makes sense. Those of you that are on the call right now, does it make sense as far as the monthly chart, what the first things are to do? You go from the news, then you think of liquidity mapping, you think of the previous month's highs and lows because we're on the monthly chart, and then PD arrays that are in close proximity, and then you just do the same all the way down to the daily chart. Does that process make sense to you guys? Let me know in the chat. Yeah, okay, cool. Cool. All right, so with that being said, if we unmask the markups, yeah, Tony, it is. It's extremely powerful. It's very basic. It's not overly complex, but ICT has mentioned before that every single concept he utilizes, well, this justifies me simplifying things and doing things the way I do it. He said every concept that he uses can be simplified just like the 2022 YouTube model, right? The run on stop, shift in market structure, fair value gap model. Everything can be broken down in a simplistic way like that. Okay? So keep that in mind. It doesn't have to be overly complex. You don't have to know every single concept, and things can be simplified like this. If I was listening to what I've been saying, I would think this is a very simplistic way to identify important liquidity pools. It stops your ability to try to go too far, like look for this high or look for this low. It puts you right dead in the center where price is at. You're in the liquidity center point, right? Like what is important right now, moving on to the next day, week, and then eventually month, if those levels become relevant, which is them getting closer to previous month's highs and lows, quarterly highs and lows, so on and so forth. That's the only time those things become important. There's so much to do right now, to at least to look at and observe, so you can be prepared. So hopefully this stuff has been easy enough for you to understand. But yeah, so again, you take the previous month's high and low. Right, we got the current month's high here. I was hesitant to put this some of the markups on because it's getting a little busy, but let's just do it for completeness sake. Okay, so this is going to be, these would be our liquidity that we're going to try to use. This is the current monthly low. So if we move to like the weekly chart, you'll notice that it's actually a weekly low, right? It's the previous week's lows right here. Okay, so let's actually move down a little bit. I don't know why there's not a gray. I think it was a holiday or something. That's why it doesn't have the Sunday, because that's what these gray areas are. It highlights Sunday. So then you could map out, okay, that's the weekly range from that week. This is the weekly range from that week. This is the weekly high because it's the high that's inside those gray areas. So just it consolidates your thinking so you don't have to think too hard about where these levels are at. And that's the luxury behind my indicators that I use. Has nothing to do with putting me in a trade. Has everything to do with helping me with liquidity mapping. And most of the stuff I don't need. I just have it on there because, it's nostalgic from when I didn't know anything. And I've just gotten used to it. There's no issue with having certain indicators that help you in that regard. So yeah, so we got the monthly high, monthly low currently. Go to the weekly high and low, right? We'll look at the weekly candle. Each of these candles is a weekly chart, or a weekly candle, weekly range. So weekly high and low. This is the previous weekly high and low. It's also the current monthly low. So we've got a volume imbalance in here. We got the order block in there that I've been talking about. Notice how it's respecting that 2-week order block very, very, very nicely. So there's nothing telling us otherwise. The price is, or there's nothing telling us the price is not going to continue going lower. I can say, this shift in market structure or not shift. The run on stops, the low here has a SMT at the lows. Okay. So if we were to give a failure swing in here, this high to that low, failing to swing below this low, and then eventually breaking above the high up here, that would become a type 2 dealing range. I would classify this high to that low as a balanced price range, and then we would then look to target this high up here, and then that would change the sentiment because of the SMT, the failure swing, the run above the high here, shifting market structure after a stop hunt, inside higher time frame PD arrays, that being the quarterly wick 50%, and the fact that we're inside also the 20 and 60th day of the 20, 40, 60 day look back, cast forward idea. That's where quarterly shifts take place. That's why that is so important, right? Let me see if I can get this. I guess not. I guess it skipped it, huh? We do 40 day. Then we'll do the 60 day. And like I said, inside the 20 and 60 day mark, that's where we get a potential quarterly shift. It could either be a shift continuing to go higher or lower, or it could be or it can be a total shift in sentiment, continuation or shift in sentiment. All right, so let me turn this color yellow. All right, so okay, so it looks like we've already set a high, obviously. So again, nothing's changed. What does change my sentiment overall for the narrative to be bullish now is if we get up and do what I just mentioned. Basically breaking above this high, creating the type 2 dealing range. Let me classify something real quick. I'm gonna talk about that today, actually. But yeah, so keep this in mind. So basically, in a nutshell, if this high is taken, that'll basically change my sentiment to then try to look for buy side. This high, the wick quadrants in here, so on and so forth. If that doesn't take place, then again, we're just going to continue to smash lower. Let me see something. Okay, there's a wick in there. So fair value gap here. Notice this fair value gap. Drag it over. It's been beautifully respecting that level. And then, of course, inside that, we have the monthly fair value gap that's holding price, right? So hopefully this makes sense as far as what I'm wanting to see in this asset. Do we have any big news events that could change? Yes. We have CPI next week. So CPI, it's going to be very telling whether we're going to have a quarterly shift that changes up things and shakes things up, which a lot of times happens within the 20th and 60th day after a new quarter comes. It's either going to switch using CPI or it's going to really rampage and continue using CPI, because that's massive institutional sponsorship. So yeah, with that being said, that is what you want to look out for. That's for sure. And of course, we have interest rate announcements coming. I'm not sure exactly when. So within the next couple of weeks. Yeah, so we have a rate conversation on July 30th. So that's going to be very impactful, because if they cut rates or if they leave them the same or if they increase them or whatever, it has a direct impact. Like, it's one of the most dynamic things to wait for when price is making a move, or when you're trying to gauge what it's going to do for the quarter, for the next week, next month. It's extremely, extremely impactful. And then, of course, you look at what happens here, right, with the announcement, and then you take yourself to the bonds and yields and see how whatever the announcement was impacts what the interest rates are doing. So then you can have a understanding next time. Institutional levels, what do you mean by that? Do you mean whole numbers? What is that? Quarters theory or something like that? What exactly do you mean, institutional levels? Generally, those are the whole numbers, because what ICT has mentioned, when you're a big corporation that's trading billions of dollars, you want to have easy math. So that's why they That's why you see a lot of dynamic delivery around whole numbers, right? Like the start of moves happen very often at whole numbers, quarter numbers, half numbers, 75% numbers. So yeah. So again, I hope all this makes sense. Hopefully, what I'm looking for is clear to you guys. Okay, so if this is going to continue going lower, we'll continue to watch for these lows here all the way to this low. If it does want to get down there, if we do break down like this, again, we have each of these candles is a weekly candle. So each of the lows is a weekly low. So it makes it very easy to map out where the liquidity is at based on that, aside from the other things I have on the list. So if you haven't screenshotted that list, if you don't have that in front of you every single day before you start trading, what are you doing? Like, you're just guessing, especially if you're having a hard time or if you're brand new. Stop making it hard on yourself, and just listen to good advice, right? So that's my opinion for the bonds. So we'll see if that has any impact. Maybe there's a retracement that happens in the indices and currencies because of that, right? If it does continue to drop, but we'll see going into the week. Low expectations, by the way. Let me set the table. I should have done it earlier, but when we looked at the news, we saw CPI protocol, similar to holiday protocol, day before, day of, day after CPI, generally is low probability. You want to look at it like that. Sometimes there's moves that take place, so it's not a be-all, end-all. It doesn't always not do anything or act difficult. Sometimes you'll make an argument that things are going to move, and you coulda, shoulda, woulda, right? But most of the time, you're going to get things incorrect. The one news event that ICT gets incorrect the most, which he showcased for the last 4 years, and even beyond that in the private group that he has, it's CPI. He'll call out a move, and it'll fake him out. So, what is the purpose in trying to go against that and make your own rules that are more aggressive? It's not worth it. Let yourself be comfortable with not taking a trade sometimes. Let yourself be comfortable with pulling back on your risk. Because if you're not, right, think about this. Most people are not pulling back on their risk. They think it's taking longer. They think that it's a waste of time. They think that, if they take a loss, dropping their risk is not eventful. Like, it's not helpful. It's not going to do something. Well, I've proven that it does help, and ICT has mentioned it. Many people mention it over and over and over. Managing risk is so important. And part of that has to do with you understanding how to navigate CPI, FOMC, and all these things. Like, at least understand the characteristics and keeping a rolling study of what happens during those events. I had a student that he was basically talking about the role that FOMC, NFP, CPI, those news events, the role that they have in the monthly Power 3. Very interesting study. I'm not going to get into it too in depth here. I'll let you go do that on your own. But it's a very interesting study, and I think it's worth looking into, right? So again, I hope that the bonds made sense. So if we're thinking that they're going to go lower, then same thing should take place here, but only opposite. Okay, we've been proven that it does still want to go higher. I mean, this is pretty telling. And now we got a bullish order block. Okay. Before I get too deep on the PD array identification, though, I want to do what I just mentioned and showcase the process again. Okay, so we go to the quarterly chart, see where we're at. Get everything to size. Okay. Ooh, I see these equal highs up here. Very interesting. Oh man, that's very interesting. So yeah, I'm gonna keep my eyes there, just in case. It's kind of far away. I don't think that one candle will get us here. But who knows? CPI can do some wild shit. CPI is not to be played with. It's one-sided event. NFP, FOMC, they're generally two-stage events. Generally, there's two news events, like one at 5:30. Then there's one at later in the session. Sometimes the news comes out, NFP, FOMC comes out at 5:30 a.m. Pacific Standard Time. Then there's another less impactful news event that comes out at 6:30 AM Pacific Standard Time. And basically, right when the news comes out, it doesn't do anything or moves one direction, but then the secondary news comes in, and then it goes the way that it's intended to go based on the higher time frame. So that's the characteristic between FOMC and NFP. Two-stage event, right? First move is generally fake. Think power 3 and manipulation, and then of course after that, when the other news event comes out, generally that's going to push price where it's intending to go after it's punished and purged out the early traders that got fooled by the manipulation. CPI, on the other hand, is a one-sided news event. It busts out like a rocket ship going one direction. If it does that and then it hits like a daily opposing PD array, sometimes it'll pull back aggressively on what it just did off that one-sided news event, and then it'll potentially continue going in the intended direction if you're correct with the bias and narrative. Okay, so those are the characteristics for CPI, NFP, FOMC. That's how they behave. And if you ever look to trade any of them, you have to wait till like an hour or a minimum 30 minutes after the news event comes out. If there's two news events that overlap this and the big news comes out first, you should not be looking to engage that first initial move. Right? So these are more rules that I'm putting in front of you that if you're a good student, you're going to write them down, and you'll get a lot of benefits from this while everybody blows their account. It's a tradable event. You can trade it, but it's better for you not to trade it. I'm giving you a game plan so you could think about how to go about that, but at the same time, it's not recommended to do so. You should leave it alone and study what I'm saying. Then eventually, when you get comfortable, maybe you'll end up trying to participate in one of those news events. Right? So do those rules make sense, Tony? That's very important, and I've always thought that. Yep. Yeah, so yeah, hopefully that makes sense to you guys. Why are we talking about this? Because the news is coming. It's what's happening, and it's going to have a heavy impact on what happens. So if we take this off, we could see, based on what I've mentioned about liquidity mapping, you map out monthly high and low. And in this case, since we're still inside the previous month's high and low range, you want to mark that one off as well, because it's going to be important. If it does get up above the highs up here, it's going to have to break through this previous month's candle or previous quarter's candle, high and low. If it goes higher, though, it's going to take out the high, obviously. We have a bullish order block here, big one. We have another one here, so they're kind of working inside of each other. And then now we have this one as well. So what we're going to do here, let me actually just clear the table real quick. And then we'll start from scratch. Okay, so we got the quarterly high. I'm not going to mark the quarterly low unless we run down there. Let me see where it is. What is happening? Okay, I guess I don't have the template. I recommend that a lot of the things that you observe, you're gonna want to really make a template for them. So then you can flip to it. It kind of saves time. Let me see. Guess I'll make it that color. You may be looking at this and wondering, like, why do I put a 1 before everything? And it's because if you put a 1, things won't be in alphabetical order, right? So maybe you have a lot of them. It'll still be in alphabetical order when it's saved, but it pulls it to the top, right? You put 0, 1. The most important things that you use, the most common stuff, it's just like a trading view tip. If you want to make templates for like things like you see here, if you put a 1, 2, 0 in front of it, it brings it to the top. So then you have it easily accessible. Okay. Okay, so just thought I'd throw that in there. Let's see, quarterly high. And we got the previous quarterly high. This is the current one. It's also a previous week's high. I think it's also a previous month's high as well, or current high. Okay, so if we do that, okay, I'm going to stick to this quarterly time frame for a little bit longer. We're going to map out the quarterly order block. Quarterly order block. Okay, and then clone that. Put it to open. So now we got a little further context as far as price, you know, what it's using to continue holding and go higher. Let me see. Tony said after they make the first initial move, the row move. Yeah, especially if there's two news events within the same day. Liquidity always gets taken. Yep. Mind you, it pairs the liquidity. The fake move, the first false move, is to literally engineer liquidity. It's manipulation, and then it takes off using the losers that they engineered to pair with the winning trade that they take. If they're bullish, they're going to drop down to a discount, take out sell stops as an initial move, and then, of course, that's used to pair or engineer the losers on the other side of their trade to then look to take profit at something like a high. All right, so they sweep liquidity or PD arrays below, pair that up with losers, and then they take profit as price breaks through premiums and like highs and hits PD arrays above. Okay, so again, this is what we're looking at here. Okay, so we have this quarterly high, we have the quarterly order block. We're not quite above this, but we also have relative equal highs here. And not only that, we also have relative equal highs up here as well. Okay, so we got multiple layers of liquidity to gauge if we're going to continue going higher. So that's what we're going to focus on. So basically, they do power 3 instead. Power 3 at once instead. Well, yeah, exactly. There's a power 3 happening. You probably never heard this before. There's a power of 3 happening for every single candle. Okay, so like even the 1 hour has a power 3. Of course, all of that delivery is subservient to the higher time frame power 3 because that has to do with your daily and weekly ranges as a whole. But all the different things in alignment with like the 1 hour open, the 4 hour open, 8 hour open, 15-minute open, they all have power 3 going on. That's a very interesting study too, right? Because like you've heard before, power 3 is on every time frame. It's the logic that's used to deliver candles. It's just the way it is. It's just how it goes. You know what I mean? Each of these candles has a power of 3 of some kind, right? And if you go to the 15-minute, I mean, you could make the argument that the even lower time frames have it too. But I mean, just if you're being rational, it's easier to study, more effective to apply when you're doing things that are above the 15-minute when it comes to power 3. All right. So yeah, this is my liquidity for this. It's one of them, right? Of course, it's a higher time frame, pretty large higher time frame. So we're not going to be demanding too much. But again, if it starts raging towards that direction, which it looks like it's going to, we are prepared to target the buy side. Okay, so we got buy side there. We got equal highs up here. So layered buy side here, here, and then the high up here as well. Okay, so got a volume imbalance. I'm sure that if we went all the way back and went to the lower time frame, there's new week opening gaps scattered all through there. You could go look at that, mark them off if you want. I have certain ones written down, pretty much just the current ones, and one that's up here, to help further support this idea, you know. So this is all I would be pretty much interested in identifying here on this quarterly chart. So now if we go to the monthly, mind you, keeping in mind the liquidity mapping, you know, if you're wondering what is he going to look at, go look at the thing that I gave you. I even made a PDF in one of my in one of the videos descriptions. I can't remember where it's at, but I made a PDF about liquidity mapping. But you could simply just take what I showed in Discord. I have it in Discord. It's always there. So I'll just go make sure you take this stuff to heart, so you know what to navigate on the higher time frame and on the lower time frame. I don't know why I'm missing higher time frame PD array here. But yeah, sorry about that. Higher time frame PD arrays after you do this are obviously important too. Hopefully it's kind of self-explanatory. And the close ones, not the ones way over here, way up here, no, the ones that are close. Okay, and so again, we have these order blocks I just talked about, right? The high we just mentioned, and current quarterly high, which is a weekly high and a monthly high, from what I understand. Well, I think this is the current monthly high. But so we got this monthly high, then we got the current one. So all that liquidity is important as we move up towards this level. We have this order block that's inside this order block. So we'll see if that wants to push price above it and be used as support. My line in the sand is going to be this low here. Okay, so we got order block here, swing low, volume imbalance, new week opening gap here and here, right? So if it was to violate this low, there's multiple PD arrays to turn us around. And then of course, this is on the monthly chart, so that would be very significant. That would most likely try to get us all the way down to a level like this. That would set that scenario up. All right, so hopefully that makes sense to you. Okay, so looking at price, we have a fair value gap in here too. We've used this all throughout the delivery. I've been calling higher. So that's still relevant, especially if we break this low here. We'll then use that as an inversion fair value gap. You got to incorporate the gap too, right? The volume imbalance gap. We could get to a line. Okay, so we got that. Notice, oh man, look how beautiful that was. Price basically hit that and it's been holding up. So further evidence to help us continue to trust the narrative going higher. This is a monthly. Where is my monthly fair value gap? There it is. All right, so we got that, plus we got the monthly order block here. So as long as price continues to support these levels and does not try to breach this swing low, my opinion is we're continuing to race to the buy side. Okay, and again, you guys are seeing my very simplistic way of identifying liquidity and calibrating myself to what price is doing. Okay, this is very simplistic. No, I don't think anyone is as simple as this. And it's extremely reliable. Maybe there are some people that are more simplistic, but reliability, if they're not doing what I'm doing here, if they don't mention any of this stuff, this is basic stuff. If they're not mentioning any of this, they don't know what they're doing. They're trying to make you feel like they know more than they do. And most of the time they're selling some booty ass course that doesn't do anything for anybody. And they can't go live like we do. So there's that. Okay, so this is pretty much all I'm concerned with on even the monthly chart. So we went from the quarterly to the monthly. There's not really that many things that we've identified. They're just significant, very close, near-term ideas that we're going to use to justify further opinions on the lower time frames. Okay, so hopefully this makes sense. So go to the weekly chart. And if we look at the weekly chart, we have this quarterly high here still. Just make it a little more accurate. We do. So every weekly candle here is obviously it's a weekly range. So again, as price pushes higher, if it does look to reach higher, which I'm assuming it will, we've called this higher since this level. Price dropped down. There was an SMT at the lows. Once it broke above the high, this wick became an inversion. Fair value gap also became a breaker. We talked about that. You can go back to March or April, start of April, and go see that I've been talking about this. I'm not just coming up with it today. Everything has been continuing to paint a beautiful picture, and we've been here for every moment this year, 7 straight months almost. So, of course, this low from the monthly chart is my line in the sand for the monthly view. If we start breaking through some of this stuff, it may give us an early sign. But I'm not entirely over the buy side delivery until that monthly chart can solidify. Doesn't mean I wouldn't be able to take a short if, say, this low is broken, right? Doesn't mean I wouldn't be interested in doing something like that. It just depends on what's happening. But overall, to keep things as simple as possible, and give yourself a pretty effective way to analyze things that doesn't have too many moving parts. You want to make sure that the higher time frame, the biggest time frame you're using, is the one that makes you decide the change in the narrative. Everything else inside of that narrative you come up with on these higher time frames is literally just a retracement and something to set up further movement going in the higher time frame direction. All right, so yeah, this high is a previous week's high. So if it's going to go higher and target these levels, it's going to have to take this first and foremost. If it's going to go lower, it's going to have to take this low out. Okay, so that is something you want to keep in mind. So we got our current weekly high, current weekly low, and then we got the previous weekly low. We've taken out previous 3 weeks highs, as you can see here. Did we take out that high? Yeah, it did. Okay, so we got a volume imbalance here. Most of the time, these weekly volume imbalances are new week opening gaps. Keep that in mind as well as you're looking at the different gaps. They're new day opening gaps too. It's pretty much what every single one of these volume imbalances on the higher time frame are when you drop down. They are rooted in the new week opening gaps, new day opening gaps, so on and so forth. Okay, so we're going to watch how this behaves. I'd prefer to see it continue to go higher. Again, we got an order block in here. We have the larger perspective, basically supporting buy side delivery. So we're just going to continue to keep that in mind. It is somewhat range bound. So if you take it from this high to that low, why this high and that low? Well, this is the most recent range that took buy side and sell side and then came back into the range. Okay, so you could make the argument to use this low to that high, but you'd have to be on the monthly chart to do that, because there's just this swing low here for the parent time range or the time frame. This is the parent to the lower. Okay, so when you drop down to these lower time frames, you got to keep that in mind. But if you're navigating like the weekly or you're navigating the 1 hour, this type of scenario, you got to have your rolling observations to get closer to price. The most recent fractal high and low that preferably took buy side and sell side and has proven to continue in support of that higher time frame perspective. Okay, so this is a very important aspect of analysis. And again, so moving forward, these are the levels I'm going to look at. We got previous week's high here, the wick, and then of course the quarterly high, and the relative equal highs that have been left as a result of this rejection. Again, nothing's changed. So like I always say, if nothing changes, nothing changes. Okay, that's referring to the higher time frame. It refers to every time frame, but when it comes to narrative and bias, if nothing changes on these higher time frames, nothing changes. I will have the same opinion, and it's been fruitful, as you guys have seen, for almost 7 straight months. So yeah. With that being said, volume imbalance here. We do got fair value gap in here. Put that there. Weekly fair value gap. All right, and so with this being said, these are essentially all I'm looking at for the weekly, monthly, and quarterly chart, right? So doesn't seem like a lot, right? But we've pulled out the most important stuff. Okay, so now when we go to these lower time frames, we're able to then observe with more clarity, what's taking place. Okay, so now we move to the daily chart. So going into the new week, every single week, again, this is a point in time where you're going to have to write stuff down if you haven't remembered this stuff that I'm telling you. If you haven't done your analysis process the way that I'm showing you every week, or at least something close with pretty much all the elements I talk about, you are not doing this correctly. You're missing information. If you're struggling, it's probably why. If you're flip-flopping constantly, if you can't trust a bias and narrative, if you're confused, not knowing where price is going, what it could reach for at least, and you're just not using the tools I'm telling you, you're doing yourself a huge disservice. So going into the daily chart, starting a new week, Sunday and Monday's trading, the most near-term liquidity it's going to have to utilize, this is the Friday's candle. The next candle that opens up, most of the time, unless it has a big gap, it's going to open up inside this daily candle from Friday. So just like how we were doing on the monthly chart and the weekly chart, the current candle and then the previous candle, it's going to be the same thing for when you're looking at, whoops, where the hell did it go? It's going to be the same thing when you're looking at these other time frames, okay? Especially the daily chart. So the daily chart, the next candle that opens to start the week, you look backwards, right? What's the previous candle? In this case, it's Friday's high, Friday's low. So the new week it's going to be important to identify and observe how price utilizes the Friday's high and Friday's low. If it's going to go lower, say it does go lower, say it breaks down below these levels, gets below this, and starts pushing to the downside. If next week is going to be what starts that move, Friday's high is most likely going to be purged. We got relative equal highs up here too. If you look at the daily, right, it's a quarterly high, but looking at it from this perspective, more detailed, we could see that there's relative equal highs up there. Okay, we do got the order block in here, like I mentioned, and we're inside the weekly fair value gap. So if these continue to hold, this may not be very significant for a point in time where price is going to reverse. It may do so, reverse, maybe attempt to break through this low, take out Friday's low and Friday's high, and then choose to go higher. We are inside of a range for now. Looks like we're starting to, get some excitement to break out. But when you start Sunday and Monday, Friday's high and Friday's low are your first liquidity pool to observe. Okay, so it's part of the highs and lows identifier or liquidity mapping principle. I think I have that labeled too in this list. Yeah, Friday's high, Friday's low. Monday's trading, Friday's high, Friday's low. Okay, so yeah, I hope it makes sense. If you go back and study this, you'll see that it's very important. A lot of times Friday's high and Friday's low is used as either a target or setup liquidity pool. Even the last 3 days too. The last 3 days are also part of the previous day's highs and lows that you want to observe. During the week, previous 3 days highs and lows, they're going to be very important because that's the previous day's range, previous couple days. So those are near-term liquidity, so spending time here, hopefully the question of like what liquidity is important, how do I map out and navigate and calibrate myself to get ready, hopefully that is something that is extremely obvious. I try to make it as obvious as I can, and if it's not obvious, if it's complex, then there's like an experience gap in certain things that you probably are not aware of experience-wise or just in general. So you don't want to be too hard on yourself if that's the case, like if you've traded for like a couple months. But I've had a good amount of students grab onto the things that I've been talking about, and they're doing exceedingly well. Some have 5 years experience, some have 12 years, a couple of them have less than 6 months, and across the board I've gotten amazing feedback about this process. This is a process that I personally use and I don't see many people talking about. They're trying to cater to an audience that just wants signals. I'm not going to do that because I'm turning you into that. Okay, I'm trying to make you become a signal provider if that's what you want to do, or at least just know what the hell you're doing, at the end of the day. And most of these people don't want you to do that. They want you to have a promise that their booty course is going to do something when they can't even go live and do it themselves. Just what I do on YouTube is more than what most of these people do, like entirely, across all their different mediums. The only thing I don't do is shove how much money I make down your throat, because you can't spend my money and it's none of your business. Okay, you could put 2 and 2 together and see, like, okay, if he's 88% accurate, I pass a funded account, right? So I showed the data on that, which is a couple months of evidence, aside from the live calls, So I say all that to say that the things we do here are extremely accurate, and they're extremely effective, and they're not overly complex, and almost always easily applicable on the next trading day. Like, all the stuff I'm doing here allows you to be able to go in next week or today and tomorrow and the rest of the week, year, month, your whole career. It lets you go into that knowing what to do, So, and what levels are important. It's not just any old highs and lows that you need to pay attention to. It's these highs and lows that I'm mentioning. I don't have any additions, right? There's nothing else outside of these liquidity pools that I like to use, and it does amazing for my ability to call the market. And it's also doing an amazing ability for you guys as well to call the market as well. Okay, so it's very easy. This part is easy. There's other things more hard, but yeah, you'll cross those bridges when you get there. Okay, so again, this is Friday's high and low. Friday's high, Friday's low. Make sure we keep that in mind. And we see the fair value gap here, right? Trade back through it and then came right back above it. That's beautiful, right? So, and this is an order block. This order block, if it's going to hold, should act as a balanced price range, not only because of the overlapping fair value gaps, but also order blocks and breakers. They are balanced price ranges. Okay, there's deeper levels we can go with that concept, but that's enough. And again, Friday's high and low is going to be important, along with these levels in here. So this is essentially my map, right? What I'm looking at. This is essentially the most important things to me. Of course, each thing in between these gray boxes is a previous weekly high. So these are the previous couple weeks highs. So if it's going to attack the quarterly high up here, or just the high up here in general, however you want to classify it, these levels are going to have to be taken out. Before it gets to those levels, Friday's high is the first thing that needs to be punched through. Okay, and then of course the previous week's high here as well. And it's also the quarterly high, right? It's the current quarter's high, because the new quarter started in June, so the high is up there. Actually, it's a little off. Let me. June 2nd. So I guess it's actually up there. Sometimes when you do things on the higher time frame, you gotta readjust on the lower time frames. But yeah, so this is the accurate quarterly high. So again, as long as this holds above this level, as long as it keeps these levels intact that I've talked about, it's going to continue to go higher. And any retracement is just used in this capacity to retrace into a logical level that could send price in that intended direction, in this case bullish. Okay, and if we break down below this fair value gap and break down below these levels, like I mentioned, those are my line in the sand, like early warning signs that we may not want to continue going higher. And then of course we got the monthly low down here, which completely tells us that we're going to be very aggressive to the downside. Like I said, the early warning signs are enough if it does start to support those early warnings, like this low getting taken, continuing to smash through this, showing no respect to the buy side, no respect to the buy side. Then we can start to frame things out to target, the other opposing sides. But again, until that happens, we're not going to really do much. I'm going to actually take this off so it's not distracting, so you can focus here. Okay, so we don't want to see any of this stuff get taken out. Okay, so that's my opinion. Now we got the bonds and yields determined, right? The bonds should, based on what we see, continue to go lower unless things change, which I talked about what changes the opinion. And then, of course, this one as well, but just on the other side. Okay? So now if we go to the DXY, we are going to look at what this is going to do. Okay? Take off some of that. Actually, wipe this off. Got some shit on my glasses. All right, so I've been talking about this wick. Okay, just take a glance at the quarterly chart. Huge previous quarter, extremely bearish. So there's a lot of recouping it can do. But then again, it may not, if it's going to continue to be extremely aggressive, it may not have to really dig too deeply, and contest this up here. It may, right? It may do that. That would then translate to the bonds showing us that downside, bonds, upside, so DXY, we'd have to see this give us a breakdown, okay? So if we're going to trust that the DXY is going to have buy-side delivery in any meaningful capacity, this would, buy-side in any meaningful capacity, this will have to continue going higher, okay? So you can see there's been a slight crack in correlation. I mean, it's not only the case with this, but it's also the case with the indices, because the bonds, right, they're kind of doing their own thing. But if we're going to see a significant retracement in the DXY, justifying something to come up here, this continuing would be a great tool to use to further confirm that. Just a reminder, if you guys like the content I provide, you get value from the content, definitely don't forget to like the video, subscribe to the channel, share with anybody that you think could benefit or bring value to the community. That does a whole lot for me. It's free. It's basically a thank you to me for doing what I do. And you guys are much appreciated. The feedback is always welcome as well, how it can improve and whatnot. So thanks in advance for those things. But yeah, so if DXY, if we're going to anticipate this is going to be a strong rejection and, pull back in a very strong capacity, the yields should continue to hold up like this. Again, there's been like a crack in correlation between the interest rates and the assets they impact, just because of the uncertainty around interest rates. That may clear up soon. July 30th, I'm sure will be a pretty significant time because there's a rate announcement. So they're trying to push to cut rates. So we'll see if that's something in the cards. But again, if this goes higher, that supports DXY given this retracement. It's probably, or it is, in my opinion, a strong influence for what's been taking place, right? With that big retracement we've seen so far with the DXY. Right, this is all happening going into a new quarter. Okay, new quarter was over here. Price declined within that new quarter. Price basically got up above and then just completely slid as June came in, starting the new quarter. So we'll see how this is going to be delivering. Again, my line in the sand, aside from the yields going higher, supporting this going higher, my line in the sand for our PD array validation and validation principles is going to be the fair value gap here, which we've clearly traded through, so that's not really useful. We're going to have to see, is it going to use it as support? That may set the stage for us to blow out the high here. Okay, but if it, we pretty much, if you take from this high to that low, it's just retraced simply into a premium. Inside that premium, we have a premium array. Okay, we have a order block, and the down wick here, in the midpoint of the down wick, that's inside of the premium from this high to that low. So it's still, in this case, a healthy retracement. There's nothing invalidating things just yet, but we're going to see if that changes, right? But for now, we're not going to justify any type of meaningful run higher until proven. And it may eventually, within the next week or so, prove that it is interested in going higher. If that's the case, and we see the yields rampaging higher, that's even more convincing that that's what's going to take place. Okay. What's up, Chobizzy? Welcome, my brother. You're a little late, but welcome. Appreciate you hopping on. Again, guys, don't forget to like the video, subscribe to the channel. It does a lot for the channel and gets me in front of the right people. So appreciate y'all. Tony says, so basically yeah. All right, so I hope that makes sense. I mean, just what I just did there helps us identify what is more likely to happen here, or what should happen, inside DXY's price delivery. Okay, we're pulling into this wick, into the weekly bearish order block. So again, going into the new week, we want to gauge, right? We want to watch what's happening and gauge what's going to take place. Is it going to continue and reject from the weekly wick here, right? Are we going to continue to reject from the bearish order block, or is it going to look to want to rampage through that while the indice or the interest rate market, the yields here, continue to go higher? Because that's supportive of the run higher we've seen. This is also inside of the 20 and 60 day range I've been talking about. Okay, if we go grab that tool real quick. Go hover over June, start of June. Oh, whoops, wrong one. If we go to the start of June, drag that out. 20 days is here. And it looks like it's about to, create a high at the 40th day. The 20th, 40th, and 60th day, they also set highs and lows. See the 20th day here, high was created and it started to move. See the 40th day here, it's about to set up another high, right? Or maybe it retraces and sets a low, and then the 60th day does the same thing. But again, inside the 20th and 60th day, within a quarter that begins and just prints out, it creates a shift in sentiment, or it continues the sentiment overall. So in this case, it seems like we're somewhat in a moment in time where price may give us a pretty significant delivery back to the buy side here. That's supported by the yields. So if that continues, then we'll see a quarterly shift take place right in front of our very eyes, and this will be classified as a manipulation in power 3 for the quarter, and then it may end up getting us up above. Okay, so yeah, I hope that makes sense. We got the new day opening gap in here. I'm actually gonna remove that. Got the new week opening gap here. Let me actually set this real quick. It's a new week opening gap is going to form soon. There is the close. Oh man. So yeah. And of course, like I mentioned before, the same principles apply in terms of identifying liquidity. I'm not going to map them out right now here because there's already a lot going on. For you though, I want you to make sure you either write it down, the previous and current monthly high and low, previous and current weekly high and low, and then the Friday's high and low, and then 3 days prior to that, those liquidity pools are going to be important as well. So in a nutshell, those are all liquidity pools that are always here, they're always present, and there will always be something that works off of one or all of them. Sometimes it's one that gets used. Sometimes one of them or two of them are used as setup liquidity in the power 3 for the daily, weekly, monthly range. Sometimes, London's high and low, like session highs and lows, are also obviously some of my favorite. And then, of course, all the different liquidity pools on the list that I give you guys. You want to keep tabs on those things and watch how they are used, because it allows you to always have something to do, or to look at and study and frame something off of and build trust behind. Okay, so yeah, that's my opinion for the DXY, right? We're going to look and see if this order block is going to hold on the weekly. We have this quarterly time frame, Okay, it looks like it's pulling back for the quarter, so we may have a bearish quarter, right? If it continues to be bearish, this will simply be a manipulation. But if it chooses to go higher, we may have seen this wick that we see here, right? We may see that deliver a power 3 bullish for us to then look to want to reach up into here. That would follow the yields if everything stays the same. I'm assuming that the Kraken correlation, though, is still intact. So we'll see if that kicks in line. I'm sorry, no order block. Yeah, exactly. Right, so again, this high, this order block, and the fair value gap in here is a line in the sand for the weekly perspective changing from bearish to bullish. Okay, so if that stays intact and continues to push lower, you have no reason to try and not follow this. All right, so hope that's easy enough to get. So that's my opinion. Something at work, so reply. Okay, yeah, no worries, Mike. No worries. And there's always a replay as well. Oh yeah, you said you'll watch the replay. But yeah, so again, let me know if you guys have any questions. But this is essentially all I need to have mapped out. Same with you. There's not much until more is created. We need more information to make any other conclusions. Think power 3 also as we start the new week. Every time you start a new month, every time you start a new quarter, a new day, you always want to keep tabs on the open prices, power 3, how price is operating within that, close proximity PD arrays to the time frame you're looking at. And then, yeah. So like you see here, which I sent out to my private group, it could simply have just been this as a retracement. Because what the weekly chart looks like, it doesn't look like it's overall changing. But again, that may change because we're inside the 20th and 60th day, and it takes time for a quarterly shift to take place. I kind of want it like to break this high, because then that'll be a good example that you guys have been watching me identify for weeks as price is printed through this, and we've been talking about it. Okay. So yeah, we'll see if that's going to be the case, but this is my opinion on the DXY, and I hope that makes sense. Until we get even deeper up into the buy side, I'm going to still be looking for this to go lower. So we got the bonds, yields, and the currency, right, of DXY. Having this stuff on the back end and knowing what these things impact, we now have a great baseline to go into the currencies, foreign currencies, and try to figure out what is more likely to happen over another thing. Okay? So if we look at this time frame on the currencies, right, we have a pretty strong rejection. This has been instigated and supported by the yields going higher and the DXY going higher. Okay? So we'll see if that continues, because if that continues, then obviously this will give an even deeper retracement. You guys that have been watching me for this whole entire run higher and lower, specifically once we broke this high, I called this as a breaker, right? High, low, higher, high, and it basically delivered through that and has held up and continued. So this high to this low is a massive balanced price range. Now, if we start trading through that and getting deeper into that, obviously the sentiment overall will change on a pretty grand scale, and something dramatic would have to take place, in my opinion, for that to happen. So far the year has been in a bullish power 3. Okay, January started here, it declined, and then prices rallied up. Now we've hit the high, and now we're rejecting back inside this bullish breaker. And we have relative equal highs up here. Okay, we have purged out this swing high, so I called that as well as a target, kept our attention there. We got this wick, we got the whole candle that we've traded into. So I wouldn't be surprised if we do see DXY continue to run higher and support what the yields are doing. If this continues and we continue to see these levels I mentioned get violated up there, that may kick us in line with, like I said, a quarterly shift, right? And that may turn this price delivery that's pushing so aggressively here, it may turn this into early warning signs. These are early warning signs for this low to be in jeopardy, right? And that's being supported by the other assets we've been talking about and watching and understanding their relationships, okay? Swing low, both of them got violated, okay? And then we got this balanced price range in here, which also was a bullish breaker I was watching. That's also been traded through pretty aggressively. So now, okay, we have this daily fair value gap. I think it's a 2-day fair value gap, yeah. So we got the 2-day fair value gap, and then we got this weekly bullish order block. Okay, so mid portion of the weekly bullish order block. And then if you go to the 2-day chart, it's a little bit more clean. You could see 3 PD arrays. Okay, fair value gap, order block, swing low. So if that low is violated, this low, high, lower low turns into a bearish breaker that would be supported by DXY going higher and the yields going higher. Right, this shift in market structure happening overall within the 20th and 60th day, that's significant. You know, those are characteristics of the quarterly shift, you know, and then we could then start to frame things going back to the downside even further. You know, like this fair value gap, low here, you know, all these lows from all these different candles, so on and so forth. Okay, so I hope that makes sense. That's kind of what I'm going into the week observing. Something was mentioned earlier. I think it was, let me see. Yeah, it was Tony. Tony mentioned that, he asked a question in terms of, is there a news event that could change things and impact stuff very aggressively? CPI is one of those events. It's really one-sided. So if they're trying to break through something like this, CPI will present them with enough engineered liquidity and institutional sponsorship to then try to blow through the low, and maybe CPI will be triggering the quarterly shift. You know, so that's something that could take place. So you want to keep that in mind. But again, this is what we're observing. The only way I would get back in line with buys, as you see here, is if we get back above the bullish order block, right, on the weekly. Price will run higher if that's the case, right? But things are, you know, getting crushed here, okay, to the downside. At least for now, they're in a deep discount, so we got to watch what's going to happen. The only way I would want to get back above and go higher still, if I was taking a trade on GBP or Euro, is if we get above the fair value gap here I have, that's also, you know, retraded into on top of the bullish weekly order block. That would then push my attention to further buy side in the previous week's high, okay? So yeah, does all that make sense, you guys? Hopefully all that stuff makes sense to you. Pretty self-explanatory, very quick. You see how we got that determination so quick as far as what's more likely versus another? We have the back-end information, and now we're able to fly through this stuff. Okay, so yeah, let me know in the chat if that makes sense. Make sense? Okay, cool. So yeah, with that being said, I'm keeping my eyes on the low here. If we get back above fair value gap, I will be pretty content to try to then seek buy-side liquidity. Okay? So yeah, with that being said, we'll move on quickly to DXY. Or wait, we already talked about DXY. We already now talked about the currencies. So now we'll move into the beautiful, the wonderful, the spectacular, the dynamic, the wealth building indices, right? So yeah, we took out all-time highs. Prices pretty much rested above there. This is a typical thing. Again, another point to take notes on. When a higher time frame level is taken like this, a higher time frame PD array, a higher time frame liquidity pool, very much so in a liquidity pool that's taken like this, that'll trigger if price has been aggressive to get up there, which it has been because we mapped out the market maker buy model and it flawlessly delivered per usual. Once it does this type of thing, you have to expect either a retracement or a slowdown in price. Why is that? Why do they do that? Why does that logically, psychologically make sense? Because when price is expanding like this so aggressively, what do you think everyone's doing? They're thinking that it's just going to continue to keep going, right? So they're either going to stall like this and present a indecision candle, which you clearly see here, or they're going to retrace to an opposing PD array like this weekly fair value gap, that'll then set up potentially another leg higher from the higher time frame. So you could see that this is happening on the higher time frame, right? This is like anticipatable. You can gauge this type of behavior on the weekly chart. But again, it's the weekly chart. So you can imagine that people that take this information and they try to go to like the 1 minute and they're in a rush and they're impatient and they don't understand how important this is, you can understand how they get blown out. You can understand why they get things wrong all the time, but price goes in their direction. You can understand a lot of the problems that take place. Okay? So, keep this in mind. This is one of those things that happens all the time. And it's when price hits this and gets into this type of condition and you see this type of delivery, you now have an anticipation that could put you in line with the proper plan. Mike said we can expect a few breakout breakdowns to shake off. Yeah, exactly. That's part of the mindset for sure. So yeah, we still run the risk. Price is still going higher, but the next week, if DXY is going to go higher, if the yields are going to go higher, if the currencies are going to decline as a result of that, that promotes and is a beautiful example of, it promotes that this could retrace within the buy side delivery here that's been happening, but it also supports the process. Why do we start on the bonds, yields, DXY, and then move up as we go? And why do we look at all those markets? That makes it very, very simple to come here, have a lot of supporting ideas that would turn off certain perspectives. Like, it's highly probable, in my opinion, that this is going to reach down and target the fair value gap in here, if it is going to go higher. But then again, there is a chance for, this high to that low. Once it broke this high, it created a balanced price range because it's a market maker buy model we've used to frame out this whole entire sell and buy and reversal at the yearly order block. It's very beneficial to understand this as well. So I wouldn't want necessarily to see it come down here, but it is applicable, right? It could go down there, set up the low, and still be valid. My line in the sand to stop being bullish in the indices from this weekly chart is going to have to see this low get violated. Can you write in the chat why that is? Why is that low the one I'm looking at to change the sentiment for me? Why would that be the low? Hopefully this is self-explanatory for you guys. So throw it in the chat. I think today's call has been extremely detailed, by the way. Like, this is probably one of the more easy to follow along. Okay, say bullish order block. Is it one PD array? Is it one specific PD array that's making me think this? So yeah, let me know your guys' thoughts. So yeah, toss any ideas you guys got. What do you think is the reason why I picked this low to be the point in which I invalidate a bullish position or a bullish interest? Let me know, and after you guys let me know, we will continue. Very important to be able to identify what I'm hinting at here. I talk about it all the time. And if you don't understand it, you want to make sure you voice it because it's elements that need to be understood. Bullish order block started. Structure break. What do we look at for validation, invalidation for a particular move? Is it one PD array? Is it a certain PD array? Right? What is the circumstances that we look for? What is the tool we use? It's a very we repeat the process on every time frame. I mentioned it a bunch of times today too. When it comes to validation, invalidation, what do we use? Is it one PD array? Is it certain liquidity pool? Or what is it? Okay, I'll let y'all give a couple more opinions. And three PD arrays, right, Tony? So you guys never want to forget this, okay? Because when you're on the higher time frame, of course you use it on lower time frames too, which I show on Tuesdays and every day in my private group. But when you see price going in a direction, in order for you to trust it and hold on to trust, using 3 PD arrays, in this case the fair value gap, the order block here, it's a very small order block, which I don't like. We got the wick. I mean, it's still valid though. It still gets used. The wick, order block, fair value gap, and the swing low. Okay, that's 4 PD arrays. So that is why we use these areas, because that is an overall break in market structure. Okay, that is invalidating all this idea. And of course, if you go down to the lower time frames, you could start to get an even earlier picture of that. Okay, and start to see like this swing low, fair value gap in here. Once it gets into this level and closes below it, uses it as resistance, this would probably turn into a market maker sell model. Excuse me. This would turn into a market maker sell model most likely. I don't expect it to dig too deep because, again, we just came off the heels of this huge market maker buy model, and there's no negative news. But again, if the DXY goes higher, the yields go higher, the bonds continue to go lower, and then we start to see price break down a bit in all the indices. And then if we break 3 PD arrays, I mean, that is very supportive of price changing its sentiment. Maybe it's, long term, maybe it gives us a huge reversal, or maybe it's just setting up for like a bigger time frame. Maybe like the quarterly perspective. Maybe it wants to dig back into this order block a little bit. It's a 3-month chart. We see on this 3-month chart, we have a 3-month bullish order block. So it's not unreasonable for them to want to do that, right? So if they were to do that, then so be it. We'll be able to know that the retracement is probably just going to do that. But again, if it breaks down below this, using whatever time frame we're looking at, we got to find the 3 PD arrays. Because those 3 PD arrays, relative to the time frame you're using to gauge buy or sell, in terms of the narrative, that scenario, those 3 PD arrays from the monthly impacts the monthly perspective. The weekly, that impacts the weekly perspective. The daily, that impacts the daily perspective. Okay? All the stuff below the monthly chart they're all subservient to the monthly perspective. So if the monthly's bullish and the weekly looks bearish, it's most likely just setting up the monthly chart to go higher. Okay? But if the PD arrays are violating across the board on all 3 of those time frames, in this case to like the downside, then you could start to paint the picture that sentiment has changed. We're also within that 20 and 60th day range that a quarterly shift will take place or a continuation will take place. So again, we're going to gauge and see what it wants to do. I'm of the opinion that there may be a retracement to get down here. So if we break down on the daily, say it gives a displacement, right? And it starts, punching lower a bit. I wouldn't be surprised if they do come and sweep these people out. If you think about it, anyone that bought down here, they got their stops up here, maybe even up here. So we're in consolidation too. So it may keep this as consolidation, give a strong rejection, displacing lower to hit the weekly fair value gap. And then that delivery going lower, if we remain intact for buys, which the monthly validation's down here. So if we get a delivery down, sweeping the lows, and then aggressively start pushing higher, my attention would then go to the equal highs, and market maker buy model principles would then kick in line. Okay, the drop that may happen, if it does take place, that may set us up with a market maker sell model to then target the sell side here. So that could be used as our framework for deeper detail to gauge either scenario. Okay, but all of this is encapsulated inside the narrative on the monthly chart, weekly chart, that's showing us we're still interested in going higher until proven otherwise, right? Like that otherwise being price displacing lower and looking like it wants to target these levels, supporting upper levels as resistance, supporting bearish order blocks, fair value gaps, getting respected or getting traded through as inversions. right? All of that stuff. And then, of course, the correlation has an impact as well. DXY, what that's doing, the bonds and yields, what that's doing, so on and so forth. Okay. So again, this is my opinion, right? We have the daily bullish order block here, so we'll see if that holds. If the middle portion of the daily order block is violated, then again, our attention is down here. You know what I mean? Hopefully what I've mentioned so far is simple enough. Today has been a very to the point, clear breakdown of the process we do every Sunday up until this point. So hopefully it's made sense, right? Let's go have some fun now. And actually, let's look at these real quick. Shout out, by the way, I got to give this young man his flowers, as I always do. Shout out to my private group student that's been with me for the last year. His name's Harley. I've mentioned him before. He has done something spectacular this week, and Harley made $3,200, his biggest week yet since he's been under my wing. And I mean, it's just amazing. Okay. So shout out to this amazing young man. He has been having an amazing streak. When students get to this type of level, which is incredible how fast he's gotten here, based on some of the stuff that we've talked about. I mean, it's just amazing. It's crazy how we all see the same narrative. Can you tell who he learned from? And it's just amazing. I love and appreciate these students. And even you guys that are here on YouTube, I love and appreciate you as well. You could be anywhere else, but you're here, even though I don't give signals, which I technically do if you're paying attention. But I don't put it out like everybody because I want you to focus on what really matters. And most people, they're not going to resonate with that. And maybe I don't become the biggest influencer because of it. So be it. I know that the students that do come across me, they're going to thrive. Most of them will quit their jobs. And then a good portion of them will just use this as a supplemental income for either retirement, for, whatever their goal is, pay off debt, do whatever. They're getting those types of benefits. And I couldn't be more satisfied and humbled and appreciative of you guys, especially you guys that stick with me for hours. I've many students that stick with me for hours in my private group because it's simple to see what's happening. The pot of gold is in front of you, and just because it's explained in somewhat more detailed manner, you guys don't leave. You stay here, you listen, and you, as a result, get rewarded. So it's just been amazing. Okay, so there's one of the other days when he was at 850, day before. And then he ended up having a spectacular day here. Build it up to $3,200 withdrawal. It's going to be his first massive withdrawal. I think he took $1,000 out the other day. So in total, within the last month and a half, this student that has been with me for a year has now pulled out basically $4,000, which is, literally insane. This kid, he's not even 21. Okay, he's amazing, and you guys are amazing too. They've been showing me what you've been doing, but I really hope that this is motivational to you. It's proving what we do here, aside from me just calling the market every single week for 7 straight months live on YouTube, which I haven't done since I've been on YouTube. Just kind of showing you what the vibes are in my private group, the value I have to give, and the things that I tell you, this is evidence, not only from myself proving it live, but you're seeing students absolutely smack the hell out of the market. And it's just spectacular. And then of course I have students here as well. I want to give you guys some shout outs as well. Tony, you're here always, so shout out you. You're doing amazing. Fritz, slow and steady, right? You're making progress. Don't be discouraged. But you're doing very well. You sent me something this morning, and if you didn't read that message, I hope you read it. Who else? I have another student too I want to mention from earlier. Some students, all students have different objectives when they come to me. Okay, some students have the objective of coming, getting what they want, and leaving. Most of the time, students come and they stay. At least they stay in contact with me. You know what I mean? Some students don't like certain things like private groups and whatnot. But oh, and again, this is the funded account that I did, this equity curve, and I passed it. I left a whole plan for you to look into how to manage a funded account, just like a piece of what I tell my private group students. And then we have my little brother, right? He's over here smacking things. It's another huge blessing. I get to teach my little brother to do this and see him grow, along with you guys. You know what I mean? My private group, these are my focus, by the way, for those that may not know. This is the focus. This is what I do. This is what I do every single day, every week. And this is how my students are succeeding, because it's organized. I tell them exactly what they're supposed to do. They watch ICT's YouTube channel, because I don't recommend getting away from that. You just use me as a supplemental mentor. I have 2 other mentors outside of ICT, but they are ICT traders. But perspective is key. Some people just need a different way of explaining certain stuff, and then it clicks. Or somebody, may need someone to simply just showcase the stuff real time, how they use things, how they navigate and organize things, and it's just incredible. You know what I mean? The difference that can happen from a different way of explaining the same stuff. A lot of the stuff's personalized too. I have a lot of personal things that I do. A lot of the stuff I talk about, most people don't talk about because they're not profitable. They don't know what the fuck they're doing. But students like Niall too. Niall's doing very well. We all have our own battles, and it takes us a little bit longer. In some cases, it took me about 2.5 years. The 3rd year was when I had a pretty strong breakout, and then ever since I've just been doing consistent similar things. But yeah, I have testimonials all over the place for those that want to go check that out, to see people that have been with me for years. Most of my students come and they stick with me for, at this point, some have been with me since the start, since 3 years ago when I first started doing this stuff publicly. And even back then they were benefiting and doing well and improving, because by the grace of God, I've been able to figure out exactly what was important fairly quickly, especially when it comes to liquidity mapping and the different elements that I share with you. Those things I've been focused on for years, and my Discords prove it. I have stuff from 2021 where I'm talking about market maker models and all these very similar things. So I learned a lot about the right stuff very quickly, and that's what made it so I didn't have to be distracted with things that weren't helpful. And then as a result, with my knowledge, the way that I've been able to improve quickly, I've been able to share that with you guys. And the best example of how effective this is my student Harley. Like, I've shown him every single thing that I've done to get me to where I'm at. He's watched my videos. He's been with me live when he needed to be, and he watched a lot of the personal videos that I have also in the private mentorship apprenticeship group, and those also, he said, were extremely beneficial. So what we do here is incredible, and it's based on this. This is our foundational learning rubric, right? Game plan, template, whatever you want to call it. And we build a process between all of these things. And then once you have a process for all of them, you become fully aware that you know what's happening, and the rest just is experience. Okay? So I want to just show you guys a little bit more. I had a student that smacked this as well. A little bit more executions than I like. I really don't like the 4 entries. But from what I understand, I think he compensated with the risk, so he was able to spread it out a little more. I'm not entirely sure. Can't remember. But then Fritz is out here about to pass, or at least get a pretty decent ranking in a competition he was doing. It's 68th out of however many. When you're just starting to trade, I mean, that's a pretty good testament. Someone that's traded less than 6 months to a year, you're able to go out there and place relatively decent and not be last and actually compete. I mean, it's a pretty good testament too, and then I showed the overall thing. Let me see where this is at. And yeah, there's just a ton of proof and evidence as far as why this community is amazing. And again, I'm saying all this to say the stuff that I do and share with you, the time that you spend with me, It's all within me trying to share the knowledge that's got me to where I'm at, that gets all my students that succeed, gets them to where they're going. And it's hopefully encouraging. I'm trying to place like the encouragement around what I'm doing, and kind of just show evidence, because I know it's hard to trust people here on YouTube. I know that it's very difficult to be around people that you can sincerely say they want your best interest. But I hope I do a good job of sharing that to you guys. I hope that I am transparent enough to the point that you guys can trust what I say. I hope I'm showing enough live to make it so you guys can trust it, because I could care less about acceptance. What I care about is those that are trying to learn and come to me. I'm trying to cultivate this view of trust, so then you can resonate with what I'm saying, because I cannot stress it enough that what I say works. If 7 straight months of calling bias and narrative 88% is not enough, like someone needs a bank statement or something, then I don't know what to tell you. It is what it is. I have students making more money than most people make per month in a week. Like, that's incredible. Just my student who's traded less years than I have, like way less, 5 years less, matter of fact. So, and then I got students on YouTube and all that. So I hope that this stuff is enough, because I sincerely want to help you guys. I want to help as many people as I can, which is why it's important for you guys to like the video, subscribe to the channel. It helps YouTube push it out to people, so then I can accomplish my mission. My mission to be a good trader, I've already achieved that. Okay, any goals within trading, I don't necessarily have. I have my set structured business plan that's running my business as a trader. But my main goal now has transitioned from building myself, being able to obviously help my brother and stuff like that. That's a huge goal. But my main goal now is to make sure that I help others, and then I have an even bigger goal beyond that. And that is to obviously, not obviously, I mentioned it before, but my big goal outside of the ones that I've mentioned, aside from myself, aside from helping you guys, I want to start an animal shelter, nonprofit, because, I see a bunch of homeless dogs where I live. I really love animals, right? And that's just something that has evolved into my goals. You know what I mean? And, I want to be able to help you guys be able to do stuff like that too, and make the world a better place. Not only make trading a better industry because there's more lethal traders willing to come out and be confident, and share their opinion, but also to be able to have an impact in the real world. I look at that stuff as very important. Having that type of goal, at least for me, I've noticed that it makes it a whole lot more easy for me to follow my rules. Even if it's just to provide for your family, and if you attach the rules that you must follow that prevent failure to those more important goals, like your family, things outside of yourself, things to help your community or the world, it makes it harder for you to break your rules in the moment. Because in the heat of the moment, when cortisol is pumping, when stress is at the max, when you're worried, this and that, and you're just trying to get your footing and things seem difficult, within those scenarios, if you don't have something that can pull you out and keep you pushing forward, it's going to be difficult. If it's just about money, obviously money is the main goal, because if without money, we're not going to be able to do any of the stuff I'm talking about. Okay, but at the same time, you want to have something bigger than just money. If it's just about money, you're susceptible to greed. You're very, very open to being manipulated because of the monetary value, or lack thereof. So you want to think very deeply about your goals. A lot of people don't think deeply about their goals. They just think, I want to make money, and that's it. Think about more things within your interests, right? Think about what else you can add to your why that makes it so important that it's nearly impossible, and so good for the world that it's nearly impossible for you to quit, but it also becomes nearly impossible for you to break your rules. Because if you break your rules, if you overtrade and over leverage, if you don't wait for your setups, if you don't develop the patience, if you can't tell yourself, I'm not going to trade today and be satisfied, if you can't submit to 30 points, at least 20 or 30, the minimum goal, and 1 to 2 trades a day, never overtrading and over leveraging, like I said, you're not going to succeed. And that's just the cold, blunt truth. And if I don't tell it to you, you may not want to hear it, but if I don't tell it to you, the market's going to tell you. And the way the market tells you will probably make you quit. And I don't want any of you to quit. This industry is amazing. I know what this can do for people. I know what it's done for people that I've helped. I know what it does for me. And I don't think I'm doing the community a service if I shy away from those truths. Just because people may not like it, they may not want to subscribe, they may not want to sit and listen to me talk and say this stuff. If I'm willing to risk that in order to give those that do want to listen the truth. And again, this is amazing industry. It's better than anything you'll ever try, but it's also probably the hardest thing you'll ever try to do, because you're fighting against yourself after you learn the technicals, and yourself is a lot harder to overcome than just simply learning the technicals. It's much more difficult because you got to live with yourself, and you got to live with the decisions you make. And if you're constantly making shitty decisions, constantly hurting yourself, knowing that if you just wouldn't have taken that extra trade, if you would have just sat on the sideline because you're not used to trading NFP or FOMC or CPI, or whatever scenario sets you up for a bad condition, if you can never engage the bad behaviors that you identify in yourself, you will have so much more of a better experience, so much better odds of succeeding. And it's simply just and that psychological battle is constantly going to be there. And if you constantly break your rules and break these things, you're building bad habits, you're hurting your self-image, you're damaging your ability to be rational as a trader. There's so much negative that comes from it. But in the moment, it feels good to think, yeah, let me just go make it back. But, you may not make it back all the time. And if you're not prepared for a long-term perspective, and you're trying to hurry this up, those mindsets are the reason why people fail. It's not because trading's impossible, especially with what we know. It's absolutely possible. I got a 19-year-old. He hasn't even had a job. Harley. He hasn't even had a job. I think he's 19 or 20. I don't even think he's had a normal job. My little brother hasn't even had a normal job because of the proximity of what he's seen me influence him to do. And I feel like it's the same for, students like Harley. I've talked like this. It's the same way I talk to my little brother, my family, the people I truly care about, and it's beneficial to them. Some people don't have a father figure. Some people, like me, I don't have my dad. He's a scumbag. Okay. Like, I don't have a dad. I just have my mom. I have a tiny family. I don't have a lot of influences that could be positive aside from my mother. So I've had to be the good influence, and I've had my ups and downs. I've made mistakes. I've, done things that are definitely, I wish I could go back and rewind and not do them. Okay. But that's all of us, and I just feel like I need to give the best advice possible. Maybe there's other scenarios as far as why you need better advice for this stuff, but and just things in general. But as far as trading is concerned, things like that are happening in your personal life, they will have an impact on you. And again, that's why I focus so much on process. That's why I focus on the realities, the truths, the things that you need to hear, not what you want to hear. There's hundreds of thousands of people sharing what you want to hear. Get rich quick, all this other nonsense, renting Lambos, making you fantasize over their fake life. Okay, but that doesn't get nobody anywhere. That type of BS screwed me over my first year. I probably would have been profitable quicker if I would have just been with ICT first, which I didn't do because he was boring. I made the excuse until I really started getting punished by the fake information, and then finally just submitted to the fact that, he's telling me the why, the what, the where, the how, the when. Why am I shying away from it? I didn't have confidence at first. I thought it was too complicated. He's a complex individual, and I was intimidated. And then once I just said, fuck this, I'm trying to do this. He's the only one that I can see that does this properly. His students are out here doing amazing things. I ended up just submitting to it, and I'm glad that I did. And I'm grateful that you guys are. And I hope that I have an influence over you to never switch, never add things to it that are outside of what's taught. I hope you understand that this can be personal, and I hope that what I do gives you the realities and you submit to them and don't get discouraged, but get motivated because now you know what's ahead of you. You know the terrain that's ahead of you. You know the battles that are coming for you that you're going to have processes and rules to protect yourself from. Okay? And I hope that I've had an influence over your ability to put a level of importance on process that most people don't. Because it's so important. If you look to trade full time, trading full time is going to require you to have processes that stop you from yourself, that protect you from yourself. Like if rent's coming up, if bills are due, if things are happening, if your car breaks down, if a death happens in your family, if any other catastrophe takes place, there's another virus, okay, that messes the world up. Okay, if there's anything that can distract you and make you like derail yourself, you're going to only have one weapon, and that's going to be your ability to manage risk and have the processes in place that detach you from the outcome and detach you from the results. Okay? It's only that weapon, okay, that you're going to have at your disposal to protect yourself from not only the market crushing you, but also you making bad decisions. That's the only thing. That's why I mention it so much. And for those of you that have that goal to be a full-time trader, those of you that have that goal to make this a reliable income, even on a small scale, to pay off a phone bill or something, you're going to need this perspective. I don't care what happens in the market. I want to win, obviously, and what we do puts us in position to do just that. But I don't care what happens, okay? I don't care if I take a loss today, I will make it back within the week. If I don't make it back within the week, I'll make it back within the month, okay? I don't care, okay? Because I've proven not only to you guys, but most importantly to myself over the years, that what we do here is unrivaled. It happens over and over. And just because you get it wrong one day doesn't mean you'll get it wrong the next. Okay? Maybe you accidentally in your real life, say you get in a car accident. All right? Or someone hits you or you hit the car. Whoever's fault it is doesn't matter. Is that scenario, that step back, that bad situation, does that make you stop driving a car? Does that make you, do reckless stuff? Maybe you get pissed off or whatever. But does that make you change your life? Okay, or the way that you do things? No. So you're driving a car as a trader. The car is your model. Okay, all the different components, that's your trading plan. Okay, if your car gets in an accident or you get a flat tire or whatever, you won't just throw it away and stop it entirely. You just won't take that as a reason to stop driving entirely. It's the same with trading. Yeah, it sucks sometimes. You take a loss, you don't do it right, conditions may be shitty, things may not be going the way you want it for now, but that doesn't mean that things are going to not fall back in place. That doesn't mean that you won't learn to be better. Okay, and being here, you have no choice but to learn to be better, because that's all I do every day is show you the right ways to do stuff. And unless you're just breaking the rules, you're going totally against what I say, you should be able to get some very strong progress. And this is only here. Imagine if you were in the private group having 6 days a week with me. Either way, they're both amazing experiences. And I have it done very purposely in that regard. Some students, want that extra help. Some students don't, right? But regardless, whether you are here on YouTube in my free Discord or whether you're in my private group and decide to, invest in me as a mentor and become a lifetime student with my private group apprenticeship program, you're going to still get value. People like Tony, people like Fritz, like many other students that hop on regularly, they see that. Not everyone's going to need to be in the private group, and I don't want everybody in the private group. I'd be more than happy to take you guys and get you in the private group if that's something you wanted to do. But, some of you guys may not need it. Some of the stuff that I talk about may be enough, and that's okay. It's not for everybody, my private group. It's for very specific needs. It's an apprenticeship to watch and shadow a trader that proves he knows what's going on. And those students that may need extra help, maybe they're really struggling. Maybe they're in a place where, they just need extra help for whatever reason. Maybe I've had a student that came to my private group that had 15 years experience and was broke, completely broken down. He was 61 years old and he was not giving up. And nowadays, he's not in my private group. He's an older dude. He doesn't want to be involved with the community, so be it. But, he's been seeing more progress. He's been able to pass a funded account after 15 years of lacking profitability. Comes to me for 7.5 months and finally makes something positive happen. I mean, that's probably one of the most insane testimonials aside from Harley, okay, who's been here for, a little bit over a year and is now pulling down $3,000 weeks. Like, that's insane, okay? And that's a bigger testament than I could ever provide showing results on my own. Those students, it doesn't matter how old you are, doesn't matter what you do, doesn't matter what your perspective is. You know what I mean? It depends on what you're going to do, how you use the resources, and the things that I mentioned, whether you're in the free group or the private group. I've had similar testimonials all throughout the years with my YouTube channel and just me showing this type of stuff. This year, I've paid attention more to giving you guys value more than I ever have, being live every single week consistently. I haven't missed 1 week. And it's, I've seen the fruits of it, and it makes me very encouraged, very motivated to keep pumping these videos out, even though the views may be small, even though there may not be a massive amount of people. I know that I'm still having an impact on you guys, and it's not a small impact, and I intend to continue to give you guys tools that can help you get to where you're trying to go on your own, and then just, keep me updated and, spread the word, right? Anyone that wants to join a good community that's supportive, that truly wants you to succeed, that has proven students and a mentor that has proved that he can succeed, you're in the right place, and I hope you guys feel confident in spreading the word. If you have like people that you care about, because that's very important to me too, that my students have a good view of me as a mentor, so then they feel inclined enough to confidently and happily spread the word, not because they were paid to for a paid ad or, whatever the case may be, and that keeps everything organic. That keeps the community tight knit. That keeps everybody close to each other. And as a result, as you guys improve, you feed off of others' improvements, others' issues, right? Both sides of the coin. It's beneficial. So yeah, with that being said, I just want to thank you guys for the support. I want to thank you guys for listening, giving me your ear. I care about this industry tremendously. I care about you guys. I want you to succeed. And this is my life. I'm a trader. And I'm not sure if I was born to be a trader, but this is what it is, whether I was born to do it or not. Because this will never be something I stop doing. I will be 80, 90 years old still looking at NASDAQ if it's still around, which I believe it will be, obviously. Maybe we'll be on crypto at that time or another asset doing the same stuff, but this will never go away. I will never go away. Maybe I get less public later in life. Maybe, who knows what life will bring. We never know, but I definitely want to leave an impact on, a good amount of people before I leave this earth. And the vehicle that I have is trading, and that vehicle can set me up to do other things. Like I mentioned, the animal shelter, maybe help the homeless, maybe do something that's really meaningful that can allow my name to live on, and continue to provide impact well beyond my last day on the earth. You know what I mean? Well into my daughter's life, my grandkids' life, and beyond. So that's how I view trading, and I hope that some of the perspectives today have been helpful. Hopefully everything makes sense in terms of what we're looking for. Before I let you guys go, before we put a ribbon on it, I want to make sure that your guys' questions have been answered today. Did everything make sense? Do you have a game plan as far as what you're looking for in price? And if you guys have questions, let me know, and we'll spend the next 15 minutes catering to whatever it is that you guys want to talk about. I'd be happy to very specifically target specific topics for the next maybe till 10, depending on if I get a lot of questions. It's 9:37 right now, so 20 minutes. So yeah, let me know in the chat. Because remember, this is for you guys. It's not just to hear me talk and toot my own horn, or even just my students' horns. It's for you guys. I want you guys to feel comfortable. I've had a couple students lately. One student that's new in my private group, he sent me a big message talking about how he is concerned about saying something stupid or looking silly. And there's no looking silly here. Anyone that is a clown that wants to attack new traders that are asking questions will be permanently banned from YouTube and my private group. I have zero tolerance for scumbag idiots that think they're better than anybody because they can be quiet because there's always someone better than them. And they got a lot to learn. They're probably, most of the time, they're unprofitable, trying to talk shit to other people that are, having the right mindset because they're jealous. So just know that this is a place that I encourage you to ask questions because you help others by doing that. You help me help other people by asking questions, which is pretty interesting to think about, right? But your question is probably on the mind of someone that's not confident as you are to ask that same question. So it's very, very important. And again, I care about this because I care about making you guys succeed. That's my goal. And you guys help me with that when you ask questions. So yeah, before I sign off, before I cut you guys loose to go attack the market later in the week, let me know if you have any questions. No, it's okay, Fritz. You don't gotta apologize, brother. There's always a replay. I kept it a little bit to the point, or more to the point. I'm probably gonna have to start doing that more. I know that that's part of the reason why some students don't stick around too much. Some of them, I've gotten messages. They're like, I love your stuff, but I want to come and get what I need because they work, they have kids, so I want to be respectful to them and get that. And maybe save questions for late till the end like I'm doing right now. I missed most of the live, if possible. Quick recap on DXY compared to my notes. I also sent you a private message. Oh yeah. Oh, you did? Let me. All right, I'll check that out later. Yeah. So yeah, we could do a quick rerun. So yeah, overall in a nutshell, we're looking for this to continue dropping the bonds, right? Unless of course they break this high, in which this high to that low would then be possible type 2 dealing range. And type 2 dealing range, type 1 dealing range are both balanced price ranges. I won't get too into detail about that. But aside from that, simply looking at, this high, if we fail to break down, we have SMT at the lows. And then, price breaking this high would be a shift in market structure / break in market structure. And then that would turn us back to the buy side. But if we just continue to smash lower, right, we have a weekly... I think this is a weekly bearish order block. Yeah, right there, the 2 up candles here. So that's a weekly bearish order block. We got the middle portion of that. So we're still respecting it. Look at the bodies. Bodies tell the story. Wicks do the damage. So, we're still going to continue pressing lower. That may trigger in the currencies and indices giving us a decline off the extremely strong buy-side delivery in that market maker model that's fully delivered here. So we've been following all throughout here. So that'll support this giving a rejection if we see the bonds continue to tank, which is what I'm going to monitor. Same with this, but the reverse, right? This is looking like it wants to go higher. It's respecting these lower PD arrays, shifted market structure here. We'll see if this bullish order block holds. We'll see if this weekly inversion fair value gap holds as well from a while ago. It looks like it's using that level pretty significantly. So we'll see if it uses that as a fair value gap. Order block, maybe we'll set up another fair value gap here as well. Use that to continue running higher. That would support buy-side delivery in the DXY. So if that happens, we're going to stick to that. But again, we're going into this week knowing there's CPI, and we got to be very cautious. Okay, we're going to move with caution, keeping these opinions held lightly. Okay, we got Friday's high, Friday's low again, right? I talked about the liquidity mapping, marking off, what liquidity levels to mark off as you drop down in time frames, previous months high and low, days high and low, weeks high and low, and then close proximity PD arrays like you see here. And all that stuff lays the groundwork for our decision making, which in this case for the bonds, there's a possible chance for it to continue supporting downside. The yields look like they may continue to support buy side. That is bullish for the DXY. We have 3 PD arrays in the DXY. We're going to watch those plus the down wick. If those things hold in price, then we're going to see price go lower. But if they don't, we may see a quarterly shift like I mentioned earlier, because we're in the 20th and 60th day. If we continue to see price ram to the buy side off the heels of the bonds and yields relationship that's happening right now, if all that stays intact and we break the high up here or simply close above the middle portion of this wick, I believe that we will then look to want to go higher. This could very simply, though, like I say here, it looks like it's still holding for a potential retracement, and we're going to observe how this is going to behave. I can say that if we break down below this daily low here and get back down below this weekly fair value gap, I feel like that'll act as a reason for us to support continued down delivery. Okay? Where the hell is my quarterly shift outline? Didn't I write that? I think I'll just copy that real quick. The hell? So yeah, save that real quick. And what the hell is it? Fresh. Sorry guys, I don't know why I didn't save. I could have swore I did it earlier. You guys probably saw me. Could have swore I mentioned. Could have swore I mentioned it. There it is. Yeah, so yeah, we'll see. And if this is the case, right, and it does choose to go higher and start supporting buy-side delivery, then we will see, again, this be the quarterly shift unfold right before our very eyes, and this down delivery will simply have been the power of 3 manipulation within the quarterly buy-side delivery in the quarterly candle. And then, of course, we have these levels up here we could target if it does do that. We need more evidence, though. We don't change our narrative right away just because something reverses like this. Look at how deep this one went, and it still continued. Why did this continue? Because 3 PD arrays weren't violated. Fair value gap, wick, high, order block. Another fair value gap. All right, so none of that changed. Everything was still bearish because of that, staying intact on the higher time frame. This is a beautiful example of why you need to hold on to the higher time frame. Just because you have 1, 2, 3 bullish candles, unless the 3 PDA rule has been violated, you're more than likely going to just be in a retracement and it's going to continue. Okay? In a case like this, right, we got 3 PD arrays here. Very clear, very close. So we'll see what happens. You know, that may turn into a run on stops, quarterly adjustment from sell side to buy side in terms of sentiment. And then we'll have to adjust according to that. That supports this going lower. And, you know, because we understand what the bonds, yields, DXY are going to do, again, that supports this going lower. So if we break this low, that's supportive of a potential shift in market structure within the 20th and 60th day. And then we'll use this as a bearish breaker and see if the middle portion of that can be respected. If it is, then we just can look to position within that context of the redelivery on the daily chart to the breaker, and then look to attack sell side as we march forward. All right. So of course, if it's like that with the EU, it's going to be very similar with the GU, or vice versa, right? GU is this way, EU will probably follow suit, especially if the DXY goes higher. Okay. And then if we look at the weekly chart, we got the fair value gap in here. What's my line in the sand if I'm looking at this asset? If we look at this asset, we have a low, high, right? We have, we have these order blocks, or an order block there. We got the weekly fair value gap, and then we got the swing low. So if it breaks down below this, it'll have a similar effect to this, right? So and if it fails to do that, and then we start to rampage to the buy side, get back above the weekly fair value gap, then the upper levels we have is the previous week's high, monthly fair value gap that hasn't been reached into, buy side liquidity, a high that hasn't been tapped into, and we got a weekly fair value gap up there as well. So we have multiple layers of liquidity. First stage, second stage, third stage. That's only valid if we get back above these weekly fair value gaps and provide support and go higher from there. Okay, we can actually remove that. Whoops. Okay. So yeah, hopefully that makes sense. Some really good questions. I know the TE on DXY inside perfect day for regular. Just after far swing. OTE. Yeah, from this high to that low. Yeah, I mapped that out earlier. Took off the fib. It was just too much stuff. But yeah, this is a premium array, right? Price declined. Premium array is in a premium, right? So if you're looking for a PD array to be targeted that could be useful in a logical level, considering premium and discount ideas, the ideal PD array in a bearish trend is a premium array above equilibrium. In the 2022 model, ICT's mentioned this. That is the best scenario for you to use the YouTube model, right? If you're mapping out a range, you're trying to find premium and discount. Same with every other model. You know what I mean? You want to find premium arrays in a premium supporting the downside move, and discount arrays inside of a discount trying to target discount moves or buy side moves. Okay? So very, very important stuff. Okay, so then would you have a break of OTE 79% as part of PD array? No, I wouldn't have that. I mean, it's supportive, right? But I need 3 actual PD arrays because the OTE, it's not necessarily a PD array. I guess you could say it is, but there's still something you need to execute on. A lot of times the best OTE, the best delivery for that is lined up with a order block or a fair value gap that's in line with that overall idea. So there's still extra layers you can take that to make it more effective. But yeah, I would obviously be on this weekly chart, and this is what I'd be looking at. Very obvious PD arrays, right? You could add the 79% getting violated as part of your PD array matrix. Don't let me take you away from that. If that's something you feel is useful to you. It doesn't positively or negatively affect anything because we have other elements, but maybe it's something that's helpful to you, and there's nothing wrong with that. So if that's something you want to add, you can. It's not going to hurt anything. So yeah, I'd say that if it breaks above this wick, consequent encroachment, I think that's a little bit more impactful in terms of structurally supporting the fact that we're not going to use this as a continued down delivery. It would push us into a potential shift in market structure. You could see this down here. A lot of people probably use this as a potential low being formed. Maybe they are correct. Maybe this does result in price getting all the way up here without us having to see this stuff. Me personally, I've seen price do this type of stuff, aggressively trade back, and then price continues to drop. Beautiful example is this here. So I need to have more obvious delivery, and it's easier to learn this way, and it's easier to apply and then be effective with if you just keep it very simple to the obvious PD arrays that are in close proximity using the 3 PDA rule. Yeah, the actual ones that are on the list are generally more important. OTE is an entry tactic. Technically, it's a PD array, but it's more of a scenario. It's more of a framework to get you into something, or at a point where price is at a premium, so shorting is probably decent. Because OTE only works at the OTE. OTE is inside of a premium or a discount, depending on what direction you're going. Your daily chart shows we have room to go bullish and still within the bearish. Yeah, exactly. You're thinking properly with that statement, Fritz. We have broken through one of the PD arrays, so we got one knocked down on this weekly chart. Okay, and if we look at the weekly again, we could see, right, OTE scenario is still valid. It's still relative, right, because that's premium and discount identification. But then also, like you said, if the daily chart is showing there's some room to go higher, look at the weekly chart, right? The weekly chart shows that there's absolutely room to go higher. It could still run a little bit deeper into this order block. We'd prefer it not to, right? We'd prefer to see it decline aggressively away from this in stunning fashion, because that just makes it even more confident that it is going to continue going lower. And again, we need to wait for delivery to displace away from this, confirming that this PD array is going to hold price for us to then go down into the lower time frames and start framing something that's ready to move. A lot of times delivery to a PD array will require, like a retracement like this, it will require a news event. This delivery up into this PD array required the news to come out on Wednesday and Thursday last week. Prior to that, it didn't really do anything. It consolidated, So same with this, PD array getting traded to, anticipating that is going to come from a news event, which is why the economic calendar is like a roadmap, a timing schedule, and then pushing away from it also needs institutional sponsorship as well, which is why the economic calendar, again, is very important and is used as a timing roadmap aside from everything else, right? So yeah, I hope that makes sense. I hope it's clear as far as what I'm looking for here on the DXY. So we'll move on to the currencies. Again, hopefully what I mentioned here makes sense too. Us breaking through, this level changes the state of delivery overall. Displacing again once more through this low, really ramming through this stuff. We may not need it to blow out this low in order to catch a short to then anticipate price going to the downside. For now, until this low is broken, though, all the entries I would take for shorts on currencies, if I was trading it, they would be at half risk because the 3 PDA rule has not been kicked in yet. So there's a chance for us to be wrong and for buy side to continue. But things are lining up and looking like the timing element wise, we're inside the 20 and 60th day. The run above the highs, the strong displacement. The DXY looking like it's ready to go higher now. Maybe has set a seasonal low. The indices look like they may be trying to top out, give a rejection. We have a weekly fair value gap. That's a pretty logical target if that does end up being the case. We've purged all-time highs, stalled out as a result of that, which is to be anticipated since we've been so aggressive. That plus, of course, the likelihood of a possible retracement, given the bonds, yields, and DXY relationship. All of this stuff supports what we're identifying in the higher time frame indices chart and the currencies chart. Potentially, using this to continue, stalling out for sure, as we've seen, but then also there's a likelihood for a possible retracement. So those are scenarios we're going to look for. We're still in a bullish narrative. Bias will just be potentially bearish a little bit, depending on if it's going to have a significant run higher still, which I believe there will be, especially if we're in anticipation for the rate cuts. That's going to be like rocket fuel to the economy in the United States. That is going to be something dramatic in the market. It'll most likely give us a rocket ship. We may have to retrace a little bit to, in order to have that take place or to set that up. It may have to punish some of these people to scoop up liquidity. We do have SMT at the highs here. It's very slight, so that may be another layer supporting the fact that there's a likelihood for price to want to dig lower a bit, maybe target some of this area. Okay, so that's part of the justification for us to frame out a short if and when the time comes for that to take place. All right, but for now, we got this bullish daily order block holding. So what's the point in picking a top? We don't pick tops. It's non-negotiable. We don't pick bottoms. We rarely sell equal highs. We rarely buy equal lows. It has to purge things out and do things supporting the idea in order for us to pull the trigger. It has to be within our model. Okay? So yeah, in a nutshell, that was a quick overview. Keep in mind, I could do these calls that quick every single time, but I spend time on each topic to make sure you understand what the hell's going on, what I'm thinking, how I'm thinking, and what you need to pay attention to, and why, and everything else in between. So, once you develop this skill set, 20 minutes, you'll have an understanding. I showcase this on Tuesdays and every single day in my private group, how quickly we could come to a determination and how we can be flexible, which had to happen a couple times last week in my private group. Can't remember if Tuesday had that type of experience. Maybe it did, maybe it didn't. But I'm always showcasing this type of stuff. So hopefully it's sticking. Okay, so yeah, with that being said, beautiful people of my YouTube family, I will pretty much put a ribbon on it. Thank you again for your support. Again, don't forget to like the video, subscribe to the channel if you haven't already. It helps me help people. Don't forget to ask questions because it helps me help people. And because there's probably someone that's not as confident as you to ask those questions. So you're doing the community a service and yourself by simply asking questions, and you do me again a huge service and a huge favor by spreading the word, liking the video, subscribing the channel, subscribing to the channel, because it helps YouTube put me in front of the right people, just like you. And it's again, you're helping me add value to the community. You're helping me build this community, and you guys, especially the students in my private group, you guys are the reason why I focus on certain things in terms of teaching. I have my own way of understanding things, but you guys have helped me cultivate an understanding of different issues, different things that need to be understood in order for someone to understand this and have it click. And I feel like this year has really put a jetpack on the things that I'm teaching, because how fast I'm seeing some people learn. I mean, it's just showing that, I'm becoming a really good mentor, and it's because of you guys. And of course, what I've done on my own and the time I've spent. Those are the reasons why, we get the results we get, and the community is getting as strong as it has been getting lately. So continue to do that. Thanks again for supporting the channel. If you have any friends that you think can give value, if you have any family members, anyone close to you, I'd prefer those people to be told about the community. But even if, on Instagram or any other social media you have friends, don't forget to let them know, or at least share with them what you've been learning. And then, of course, in that same context, let them know who helped you if you feel inclined to do that. Okay? So yeah, with that being said, God bless you guys. Thanks again for all the support. Keep your foot on the gas. It's just going to be nothing but up for this year, because, there's so many good things happening in the U.S., and I feel like it's going to benefit everybody, So, and that means volatility, high volatility. That means wonderful opportunities for you, me, and everybody else that applies these amazing concepts, okay? So, yeah, with that being said, we'll be live again on Tuesday to kind of go over and analyze what's available to us and go over what we've talked about today. And, we'll see. Can I get another week straight of calling bias correctly? We'll see. Okay? So, yeah. God bless you guys. Again, don't forget to like the video, subscribe to the channel, spread the word. And, I'll catch you guys on Tuesday.